to IG's early morning call. We are on this midweek trading session, Wednesday, 17th of January. Let's take a look at the headlines as we expect a weaker start across the European markets. And oh boy, is the downside picking up. We've seen a rise in sterling this morning as a result of consumer prices rising more than expected. And we're just getting some breaking news as well coming through from Davos. With Christine Lagarde, who's the chief of the European Central Bank, says that central banks have to be aware of the fact that inflation is not dropping as many had been expecting. I'll be expecting now to see the Fed stay on hold on interest rates in March. In amongst some of the other headlines we're watching as we continue to monitor what goes on ahead of the European Open, we've got some big declines across the Asia-Pacific markets. We are down fairly heftily in the Seng stock markets this morning as a result of China GDP. Yep, it was up 5.2% year on year in terms of growth, but that missed expectations of a slightly stronger rise expected. And the big news is that the property sector remains weak. We know that that's a weak and a very vulnerable part of the sector, and that continues to be a worry. And as we move towards other news headlines in the markets today, we are looking ahead to retail sales in the States later on today. A couple of Fed members, voting members, Waller and Bostic, have dampened their expectations for an interest rate cut in March. You get the picture. The picture is risk off. This is what's happening with volatility. We are up on the session today. Volatility is showing gains, and that means that we've got this market moving up. If we ever look at the chart on volatility, we've got this rise you can see here today, and that indicates a heavy risk-off attitude. We're now down 1.15% here in London. We've absolutely stormed the support line at 75.30, which was a 61.8% retracement. The 76.4% retracement has been smashed as well at 74.74. Price target should now be 73.82. Bring a stop loss in. We were talking about these losses yesterday. We were talking about this market. We're going short, and that's proving to be a really big profitable trade that we've got at the moment. German DAX, same sort of thing. Big declines at the moment. We're now at the lowest level we've seen there on the DAX since the 1st of December. And it's the same absolutely across Europe with these warnings from Christine Lagarde, which I'll talk a little bit more about in the context of what we got in terms of UK inflation in just a few moments' time. I had here this line at 73.07, which was the line of resistance established back on the 27th of November. And that is now looking vulnerable as well. French CAC 40 now moving in the 200-day moving average of 72.92. So losses across the European markets at the start today in half an hour's time. Strap yourselves in. It's going to be an interesting session. Let's take a look at what's been happening overnight in the Asia-Pacific markets. Asia-Pacific markets showing some really hefty declines so far as some of the moves are concerned, especially in those China-directed markets, down 3.9% when last looked on the Hang Seng stock index. I'll get more on the China GDP number in just a minute. Just to explain more about what's been going on there. Nikkei 225. Now that was up 0.1% earlier on in the session today. Remember, we had those rises to the biggest gain in almost, 34 years yesterday or a couple of days ago. A little bit of money taken off the table in today's session. Also losses today, compounding what we saw yesterday on the Australian markets. S&P down by a margin just over 0.25% in today's session. Let's remind ourselves as to what happened yesterday on Wall Street. Wall Street back for the first day after a long weekend. We had that Martin Luther King Day on Monday, where the markets were out. Yesterday, we saw declines pretty much across the board. And in fact, it was the Dow which stole the headlines in terms of the biggest declines. Looking at the chart on that 0.2% decline, we're now trading at levels in the 24-hour markets not seen since the 20th of December. Pulling away from this red dotted line, which is the record highs we saw at 37.80. Short trades on all these markets as we go into the start of today's session, looking for losses across the board when trade gets underway later on Wall Street. Lowest pin we've had here now since the 9th of January on the S&P 500, and the NASDAQ or the US Tech 100 is showing losses as well in today's session. So you can see, despite the fact we saw the cash session with declines yesterday, was actually a green candle day on the 24-hour markets yesterday. But I think really the message has to be here is that interest rates across the developed markets are not going to fall as fast as had been expected. And the result of that, I think markets are taking a little bit of a concerning look at all this. Let me just quickly recap on what's been happening in China because we've seen this data coming out overnight, which has been a big disappointment to the Chinese equity market. The economy growing 5.2%. Yep, it was a 5.2% growth overall in the fourth quarter year on year. Expectations had been for something slightly stronger than this. So technically speaking, it did miss analyst estimates, but it was up from the third quarter's 4.9% pace. But as we've just seen, the market's taking umbrage about that with some hefty declines today. Now, for the full year 2023, the economy grew 5.2%. Partly helped from the previous year's low base effect. Policy insiders expect the Chinese authorities to maintain a similar goal for this year. Now, December activity indicators released along with the GDP data out today showed a factory output growth quickened at the fastest rate, in fact, since September 2022, up 6.8%. But retail sales grew at the slowest rate since September, 7.4%. You get the picture. Domestically, the economy is finding a little bit tough, but externally, there are still some positive drivers. As for fixed asset investment, well, that grew 3%, marginally beating expectations of a 2.9% rise. What I want to do is to show you what's happening with the dollar against the Chinese renminbi or yuan. This is the offshore Chinese currency. The dollar absolutely storming past this previous line of resistance at 719.95. We saw that the Chinese authorities said the December new home prices fell at their fastest pace in nearly 9 years. Now, this shows, excuse me, that internally people are finding it really tough to maintain their style of living. The new home price is falling by 8.5%. New construction starts plunging 20.4%. And you'll see this repeated throughout the currency markets today, where we've got the dollar absolutely rising against a whole basket of currencies. So just bear that in mind when looking at what's happening in the Chinese economy. UK inflation data has come in far stronger than expected. I say far stronger. It was certainly more than what economists had been looking for. And of course, this adds extra pressure on the Bank of England to keep interest rates on hold. We're just getting that breaking news coming through from Davos with Christine Lagarde, the chief of the European Central Bank, suggesting that maybe markets are getting ahead of themselves, trying to price in some interest rate declines. Doesn't look like that's going to happen here. Look at these numbers. Consumer price index rising 4%. It's only a small rise against forecasts, but nonetheless, it's what we saw last week from the US and shows that inflation is likely to remain sticky. Economists had forecast a drop to 3.8% from 3.9%. Core CPI growth, this is at 5.1%. Expectations there had been for a drop to 4.9%. Now, it marks the first increase in the consumer price index here in the UK of inflation in 11 months. And we're expecting inflation to tick up again next month, January's figures, due to a hike in the Ofgem energy price cap. Economists then forecast further declines in this. I think what I want to show you is to what's going on the foreign exchange markets. Look at this. These are 1-minute candles for sterling, and you can quite clearly see the second that this data came out. And we're building on this at the moment. Now, that is sterling against the US dollar. We already know that the US dollar is strong, but sterling is absolutely up against the dollar. That being said, in the context, you can see sterling has been down recently. In fact, in today's session, at the lowest point so far today, we've seen it tick down to levels not seen since the 13th of December. So let's just put a little bit of reality on this against that stronger dollar. This is exactly what is happening here. But I think what is worth looking at, to take a look at what's happening at GBP EUR, which gives us an indication as to how sterling is performing against the euro. Very, very strong candle on the way up today, and much of that upside has been given to us in the last half hour since the release of that data. So I think the message is here is that we've got an issue that's faced by the Bank of England, where interest rates are just not going to come down as fast as many had been hoping. For example, the rate of core inflation, which strips out the volatile elements like food and fuel, remaining at 5.1%. Retail prices, which includes a bigger basket such as council tax, coming at 5.2%, down from 5.3% year-on-year. Forecast have been for that to drop to 5.1%. So looking at this green candle here, I suspect we could well see some further upside to sterling against the euro. But don't forget, those news headlines coming through from Christine Lagarde suggesting that the European Central Bank is in the same position. Don't expect interest rates to come down as soon as the markets are pricing in. Now, let's take a look at what's happening in terms of the UK. Let's quickly switch the focus now onto the foreign exchange markets in terms of what's happening with that dollar, because potential US rate cuts to come remain very much the main driver of market sentiment. Are we seriously now expecting interest rates to come down in March? This afternoon, we get retail sales numbers where I guess there is potentially an upside to this number. The risk possibly is going to be that because of a strong consumer. Retail sales are forecast to rise by 0.3% in December month on month, the same pace as the prior month. November data suggesting a relatively strong start to the holiday shopping season, with the biggest increase recorded in food, services, drinks places up 6%. Non-store retailers up 1% as well. Industrial production forecast to fall by a margin of 0.1%. As for the NAHB housing market index, look for that to rise marginally to 38 for January from 37 in December. December was the first rise in 5 months. Let's look at the dollar basket. We have now risen past the 200-day moving average. We're climbing now at a nice little lick on the session in today's trade, 103.13. In today's session, we've seen the highest strike on this market we've not seen since the 13th of December. So this market really hopping, and that hopping is really giving us an impetus, I think, up to these levels of resistance at 103.93, especially if we get a stronger than expected number coming through from the retail sales today. Just bearing in mind this move up in the markets, just want to show you this in the context of what's happening with the euro dollar market, because euro dollar is where much of the trades are going to be around this. And as you can see here quite clearly, if I dial in what's going on, we're now into this area of resistance here, support. And we broke the 61.8% retracement yesterday with a candle close below there. The next line of support now is the 108.82, but we've got to pass through the 200-day moving average below that to get to that 76.4% retracement. But I think if we do get further dollar strength up to that level I was just talking about, I think there's a total retracement down here to 107.24 on the cards, 100% retracement from this market move that we've seen since the lows back on the 8th of December. Overnight, we've seen Fed member Christopher Waller in the US saying the path of policy change must be carefully calibrated, not rushed. His words coming a day after Atlanta Fed President Raphael Bostic said inflation could seesaw if the central bank cuts rates too soon. So Fed funds futures are pricing in a 60% chance of rate cut in March, down from about 70% earlier. I still think that's too rich. I don't know what your thoughts are. Interesting to get further information out later on today when we get the retail sales number coming out in the States. Watching out for that euro trade, which could move in the wake of that news out at 1:30 p.m. today, especially if we get an upside surprise to retail sales in the States, potentially further dollar strength. Now, let's take a look at some of the corporates out. Let's bring up a share price chart for Mitchells & Butlers, which trades under the ticker symbol MAB. Mitchells & Butlers has been doing really well on the charts. At this. We got a first quarter trading statement out this morning up to the 13th of January. So it includes the month that includes Christmas and New Year. And it's been really good. Strong trading performance over the festive season, according to the company. Like-for-like sales growth, 7.7%. Total sales growth, 9.7%. High margin food was up 8.4%. Drink up 5.9%. The company says sales have remained strong, notwithstanding a 9.8% increase in the national living wage, which adds to the cost base. But it gives people more money to buy more drink and more food and go out more. Overall cost pressures are beginning to abate, according to the company. We've seen this rise recently. Let me just quickly show you what this gain is from the lows we had back on October 2022. 164% gain in Mitchells & Butlers. The pub sector doing really well, and we've seen this reflected in the likes of JD Wetherspoon as well. And we're pretty much holding on to that. Yesterday, we saw a gain in the market. Bearing in mind, we've got a drop expected on the London FTSE 100 and the FTSE 250 at the start of the day's trade. There's bound to be some selling pressure from some of those funds involved in buying the index. So you've got to sell individual component parts of that. So there might be some downward pressure. But I think on the whole, these look pretty good numbers out from Mitchells & Butlers. Staying on the chart, just want to bring up what's happening with JustEatTakeaway.com. This trades in the Dutch markets under the ticker symbol JET. It also trades here in London. £11.44 is where that stock's going to open. It's raising its full year earnings forecast after the best ever quarterly performance in Northern Europe, the UK and Ireland. Clearly, more of us are using Just Eat Takeaway to have meals delivered. This is Europe's biggest meal delivery group. Says it sees 2023 adjusted EBITDA of around about 320 million. We've been previously looking for about 310 million euros. Gross transaction value, this is really important, a common metric for food delivery companies, growing 4% in Northern Europe, 5% in the UK and Ireland in the fourth quarter. It said the total GDP decreased by 4% in 2023 overall of the year. But clearly, the fourth quarter was particularly good. Company report full 2023 results and provide an outlook for 2024 on the 28th of Feb. Is this an upside story? Had it not been for the backdrop of a weak general market, I think this looks like a positive trading statement. So it could well see some balanced trade when things get underway at the top of the hour. Let's look ahead now to one company worth watching on the platform later on today, which is an all-session stock. It's Alcoa. Fourth quarter estimates of loss per share at 81 cents, revenues of 2.6 billion. Tough year for the group, which only managed to publish one quarterly profit out of four. Sales haven't improved either, range bound all year between $2.6 and $2.7 billion, despite a slight rebound in the last 3 weeks of 2023. Aluminium prices have remained weak over much of last year, mainly driven by concerns about the real estate market in China, which led to slower demand from the construction sector, and pressure continues to build in an area, as we've just been reporting. Looking at Alcoa late last night, all sessions on the IG platform, it did try to break the 100-period moving average, but in fact, it rested at that at $27.94. This company reports, I think, after the bell tonight, so worth watching out for that. It's an all-session stock on the IG platform. More from Angeline on this at 1:30 p.m. today to see how the trade gets underway this morning at 9 o'clock. All sessions on the IG platform. Let's move on to take a look at two other areas of the market we normally look at. I want to quickly dial in what's going on with the oil market. We remain in this little symmetrical triangle pattern here. Oil prices, it'll change. The dollar jumping to its highest in a month we've seen, but the oil markets have been supported by jitters about the impact on energy supplies from escalating tensions in the Middle East. Now, I've got the big question mark about this. I still don't know how the breakout's going to appear on this triangle pattern here. But if it does break on the upside, that would be the price target. And that would then complete this recovery here that we got in this Elliott wave, the impulse taking us all the way down almost close to this line of support of 71.84. And since then, we've seen sort of a developing of the three-way recovery. At the moment, at least that's now showing some signs of weariness, I think, which could well end up wiping this out completely for that Elliott wave pattern. Staying on the charts, just want to take a look at what's happening to spot gold. Strong dollar taking many of these commodities down. Spot gold amongst them, currently trading at 2024. That's it from me. We're back at 10:30 with Charting the Markets. Do join us there at 10:30 for that. And later on, European markets, or rather at 8 o'clock this morning UK time, do watch out for Just Eat Takeaway and Mitchells and Butlers to start today's